All right, guys, welcome back to Wealth and Travel on a Dime. And no, it's not clickbait. The banks are ripping you off. And I'm going to explain why in this video because I think a lot of people don't understand fundamentally how banks make money or how bad they are making money off you, I guess is the better way to put it. Now, you've got two kinds of banks fundamentally nowadays. We have online banks and we have brick and mortar banks. I don't want to tell you one's better than another, but I am going to explain the differences later in this video. So you're definitely going to want to watch to the end on this one. Tons of good information. I'll try and keep it as short as possible and explain it to you the way I would like it explained to me in the most basic sense. So there will be some nuances to this. I'm sure we'll hear about it in the comments, but I'm going to lay it out as basic as possible. So let's get started with, when I say the banks are ripping you off, that's because you are taking your hard-earned money and putting it in there, and they are fundamentally making money off of it. Now, for any business, we'd all be okay with that. If a business makes some money, that's how they stay in business. We have that expectation. But we need to break this down to what people think happens to their money and the reality of what happens to their money. Okay, so what people think happens to their money is they go put their paycheck in there, they go deposit their cash or whatever, and they think it gets scurried off to a little safe or vault in the bank. Now, I'm here to tell you that does not happen. Most times anymore, if a bank has a vault, it is to hold cash kind of, but it's more for safety deposit boxes. So they have another income revenue source from the physical location. Now, I don't want to give you an idea that banks aren't safe because obviously they have federal insurances and other things. That's not my point. My point is when you put your money in the bank, people think that it stays there until they spend it. But that's not at all what happens. Banks take that money and then they go to somebody else that needs a car loan, or they go to somebody else that needs a home loan. Or if they don't have any other way to make money off of it, they will go put it in treasuries. All right? That way they're making profit off your money being in there. Now, when I say that, you guys would say, well, they're making some money. No, they're making a lot of money. In this environment we're in right now, they're making somewhere around 7 or 8% on your money. Now, if we were to go to, say, Bank of America, Wells Fargo, JP Morgan, Chase, any of those, and open a savings account, what are they going to give us? For taking that money and getting 7 to 8% a year on it, what are we getting? 0.03 or 0.01%. You're getting nothing, guys. You're getting 1/100th or something of a percent. They're making all the rest. So we are taught to take our money because it's safe and put it into a bank. They're going to give us 1/100th of a percent or less than 0.5% even. And they're going to go make 7 or 8. How does that work? Now, here's where online banks come into the picture because there's plenty of them out there. I'm not going to try and go into a whole bunch. I will drop a couple names so you guys know who I'm talking about, like Capital One, Ally, SoFi. All these banks right now, at the time of making this video, they're giving you 4 or 5% on your money. Now, they're still out making 7 or 8, but they're giving you 4 to 5% on your money. Do you see the difference here? All right. I need you guys to understand these are also paid out on monthly, so they actually compound. So if you're not in an online bank with your savings, you're just giving away money. That's step one. That's point one. But the point is these banks are making double off us. And if you're in a brick and mortar bank, like your Bank of America around the corner, or your Chase, or your credit union, whatever, they're making like 7 times, 8 times what they're giving you. They're using your money essentially for free to invest. Now, some people are like, well, I feel safe being able to walk into the bank down there. I feel like that's what I want to do. And I would say, okay. But there is more information you need to know. Because It used to be pre-2020 that when you took money in and deposited it, the federal government said, you have to hold 10% of this money. You have to keep 10% of that money. You can only borrow out 90%. Come 2020, the powers that be at the Fed and the government decided they didn't need to do that. So now they can borrow all of it. All your money you put in there, they can borrow out or put in treasuries. Here's where the problem comes back. And this problem is old as time. This problem has even been showed on, Christmas specials. And that's bank runs. If for some reason you can't get your money out of the bank, you're going to get ticked. And in a time that we live in social media, if one person can't get their money out of the bank, they're going to take to social media and complain about it. And what happens is everybody with money in that institution tries to take it out, which causes a bank run. If you don't know what a bank run is, you should understand the fundamentals of your local bank. So let's say you have a corner branch of your bank right down the road. It's pretty likely they're going to have less than 50 grand cash in that place. If they need to pull out more than that, they'll probably give you a cashier's check. Say you're going to buy a car cash and you need 30 grand. They're going to give you a cashier's check to go buy that car with instead of giving you cash. Or they're going to tell you to go to their main branch with this cashier's check and they'll give you cash. They won't give you 30 grand right off the bat. I actually went in and tried to get 10 grand out one time to buy a car for my wife. And let's just say I had to go in the manager's office and we went rounds. And I told them if they didn't want me to go outside and announce that they didn't have my money, that they would hand me my money. Now, they had that amount of money, but it would limit them for the day. So my point is, when you are going to get money, unless you're at a main branch. Now, don't get me wrong, a main branch probably has $250,000, like $250,000, $200,000 in it at any given time. And they will take the business in from the smaller banks and pay out all those people that need large amounts. But on a daily basis, do you know anyone that goes in and gets tens of thousands of dollars out? It doesn't happen a lot. But a bank run happens because that bank doesn't have enough. So you go to a branch and let's say 50 people here that they can't get their money out. So they all go there and take their money out. Well, if the bank doesn't have the money to give you because they've got it all tied up in investments or treasuries, much like the latest bank failures from things like Silicon Valley Bank, Signature Bank, and many others that fell and crashed. All right, leaving their bondholders getting nothing. The banks just went belly up. Did the government step in and pay off their debts? Yes, but anybody holding a bond for those banks or anything else was left holding the bag. Banks fail, guys. And while there is insurance and the federal government will make you whole, it doesn't mean you're going to make you whole at that minute. The bank has to fail. So a lot of people had their money tied up in there for a while. I'm pretty sure there's probably still a few waiting to get paid. Will they get paid? Of course. That's what federal insurance is for. But so many people believe that you walk in the door of a bank and that they just have your money sitting back in the vault and they can give it to you. And that's not always the case. In fact, there's a lot of times where they're so leveraged, they're borrowing from other banks and paying them a few percentiles in order to let you withdraw money from your account. I mean, generally they try to keep an even balance sheet so they can cover, the amount of money they project is going to be pulled out this week or this month. But there's many times where they're locked into a treasury over a long rate period, and it can really stress a bank out. That's how a lot of these bigger banks take over smaller banks, because the smaller banks will try and get aggressive to compete, over leverage themselves, and then they end up getting sold for pennies on the dollar to big banks. Or a big bank will loan to them to the point where there's no way they're ever going to pay it back, and they just basically have to sign over the whole business to the big bank, and then it just takes it over. I think everyone needs to be a little more careful about how much faith and trust we put into banks nowadays. There is no such thing as too big to fail. We've seen that. I mean, banks fail all the time, and some come very close, and other banks have to buy them just to keep the markets calm. I mean, it happens all the time. Credit Suisse and UBS, that buyout saved all the global markets from a giant shakeup. You have to know that banks are not what you're led to believe. All right? When you go into a bank, know that if it's just a small branch, there's probably not 50 grand in that whole bank cash-wise. And 10 grand of that will be change. So that's why bank robbers are such a joke now, because you're not going to get any big money. Now, major branches, downtown branches, main branches, yeah, they probably have 200,000, 250. But still, in the scale of that, that's nothing. Think about your guys' paychecks and times that by 200, 300,000 customers that bank has, how much they're collecting. Then they're going to go make 8% off that and give you pennies. Pennies back. If you're going to have your money somewhere, I would suggest putting it in an online bank. Personally, we don't keep a whole lot of cash in banks right now. The reality is it's much better to invest your money and you go make that 7 or 8 or 10%. You take that money and do something with it to make you money, because that's all them banks are doing. You can do it yourself. Index funds, stocks, real estate. It's not that hard. But I thought this video was important because people still believe that I hand a bank $100 and they're going to just go put it back in their safe and hold it for me until I need it. No, they're going to take that $100 and they're going to take it and give it to someone else and say, you owe me 8% a year until this is paid off. Or they're going to go give it to the federal government, basically borrow it to them, and get paid 7 or 8% in the current environment when making this video for treasuries. But if you need your money back, it's already locked up over here. So I would take a moment and seriously think about what these banks are doing, and don't get caught up in the I'm with a local credit union, I'm a member, it doesn't matter. They all do the same thing with your money, guys. It's all the same. A bank's a bank. They're there to make money, and we don't have problems with businesses making money. I just want to make sure you guys understand how much money these banks are making and how little you're getting. And with that said, if you haven't already, and I don't know why you wouldn't have when I'm bringing this kind of content to you guys, this kind of value, go down and hit subscribe, hit the notification bell so you see all of our upcoming videos. Make sure you go ahead and give us a like, comment, let us know what you think. Do you realize how banks work? Are you cool with it? What banks do you guys like or do you use? I'd love to hear from you guys. I'd always like to check out new banks that I haven't checked out yet. Let us know down in the comments, and I will see you in the next one.